I, Uma Agrawal, welcome you all to the online lecture series organized by Gokule Education Society's BYK College of Commerce. Today, we would be going through the topic of single entry system, its introduction, meaning, difference between single entry and double entry system, statement of affairs, statement of profit or loss account, additional information, and its illustrations. Introduction and meaning of single entry system. Single entry system is an incomplete form of recording financial transactions. It is the system which does not record two aspects or accounts of all the financial transactions. It is the system which has no fixed set of rules to record the financial transactions of the business. Under the system of bookkeeping, generally a cash book and books to record personal accounts are only maintained. It is not really a system because under the system there may be no record of the same transactions and only partial records of some others. Single entry system is not perfect. Fraud and mistakes can hardly detected. Proper result cannot be obtained by its use. Definition of Kohler. A system of bookkeeping in which, as a rule, only records of cash and of personal accounts are maintained. It is always incomplete double entry varying with these circumstances. It also means that real and nominal accounts are not maintained. It also cannot be termed as system because it is not based on scientific system like double entry system. It is a preparation of account from incomplete records. Reasons. It is easy to maintain, simple to understand, do not have fixed set of principles and rules to be followed. Anyone can maintain it without adequate accounting knowledge. Cost effective, time saving, good for small businesses, help in decision making, evidences of transactions, and replaces memory, easier to locate profit or loss. Turning to differences between single entry and double entry system. First point, dual aspect. Under this system, each transaction is not recorded with dual aspect, and in double entry system, each transaction is recorded in dual aspect. Accounts in single entry, personal accounts and cash accounts are maintained, real and nominal accounts are not maintained. In double entry system, real and nominal accounts are maintained. Personal, real and nominal, all three accounts are maintained. Trial balance. Trial balance cannot be prepared under single entry system because of incomplete information of accounting. Arithmetical accuracy of the accounting cannot be verified. But in double entry system, trial balance can be prepared. Therefore, arithmetical accuracy of the books of accounts is verified. Next point, profit or loss. Under single entry system, profit and loss account is not prepared to find out the net profit or net loss. Under double entry system, profit and loss account is prepared to find out net profit or net loss. Balance sheet. Next point is, under this system is single entry system, statement of affairs is prepared, balance sheet is not prepared. Under double entry system, to find out correct financial position, balance sheet is prepared. Utility. Single entry system is only useful to small business concerns, but double entry system is useful for all types of business concerns. Rules. Single entry system does not follow any accounting rules, but double entry system follows accounting rules. Authenticity. The government authorities do not consider this system as authentic, but in double entry system, the government authorities consider this system as authentic. Expensive. Single entry system is less expensive because time and labor involved is less, but double entry system is expensive compared to single entry system. Financial position. In single entry system, with the help of statement of affairs, we can understand the estimated financial position of the business. But in double entry system, balance sheet is prepared to give true and fair financial position of business. Statement of affairs. Under single entry system, to know the financial position of the business, statements prepared are opening statement of affairs, closing statement of affairs. Third is statement of profit or loss. Statement of affairs is a statement of assets and liabilities in which amount of capital is found out by taking difference between total assets and total liabilities. It is as good as balance sheet used to find out amount of opening or closing capital. Opening statement of affairs is a financial statement that displays assets and liabilities, but it's not as detailed as to balance sheet as the balance sheet. It shows the beginning balances for capital. The purpose of statement of affairs to show the current financial position of the company. If the total of the asset is greater than liability side, it represents opening capital, which formula is opening capital is equal to opening assets minus opening liabilities. Closing statement of affairs. It is prepared at the end of the accounting year to find out closing capital balance. It reflects closing assets and closing liabilities. If assets is greater than liabilities, it represents closing capital, which formula is closing capital is equal to closing assets minus closing liabilities. Adverting to specimen of statement of affairs. In the books of statement of affairs, as on liability side, sundry creditors, bills payable, outstanding expenses, bank overdraft, bank loan, and last figure is capital, which is balancing figure. Assets, plant and machinery, furniture and fixture, building, investments, sundry debtors, bills receivable, prepaid expenses, cash in hand, and cash at bank. We will now go to the preparation of profit or loss statement. This statement is prepared under single entry system in order to find out profit or loss in a financial year. There are two methods to prepare such statement, but today we will be going into only net worth method. It is not possible in single entry system to prepare trading and profit and loss account due to lack of information. Therefore, to ascertain profit only, statement of profit or loss is prepared. If closing capital is more than opening capital, the difference is ascertained as profit. And if vice versa, the difference is ascertained as loss. It is further adjusted for depreciation, interest on capital, and provisions for bad and doubtful debts to calculate net profit or net loss. To calculate net worth, formula is assets minus liabilities. Next, we shall be going to look into the format of statement of profit or loss. In the books of statement of profit or loss for the year ended, particulars, inner column amount and outer column amount. Closing capital or capital at the end of the year, add drawings made during the year in cash or in kind, less additional capital brought during the year. The figure comes, that is called adjusted closing capital, less opening capital, the figure of net profit or net loss for the year. Adverting to additional information or adjustments. Additional capital. A person, if brings cash or assets in any accounting year, is known as additional capital and is deducted from closing capital. Drawings. The amount of drawings is to be added to closing capital. Depreciation is to be deducted as a charge against profit or loss. Bad debts, it should be deducted as not recoverable. RDD, it is also to be deducted. Undervaluation of assets. Undervaluation increases the amount of assets as it is undervalued and it should be added. Overvaluation of assets, it decreases the value of assets and is to be deducted. Undervaluation of liabilities, undervaluing the amount of liabilities, thus it is to be deducted. Overvaluation of liabilities, it increases the amount of liabilities and so it is to be added. Interest on loan, it is an expenditure, so it is to be deducted. Interest on capital, it is also an expenditure, so to be deducted. Interest on drawings, it is income to the business, so it is to be added. Outstanding or unpaid expenses, these are expenditure but not paid during the year, so it is to be deducted. Prepaid expenses, paid in advance or expenses paid in advance or unexpired expenses. These are expense amount paid in advance not related to current financial year, so it is to be added. Turning to specimen of statement of profit or loss for the year ended. Statement of profit or loss for the year ended. Closing capital at the end of the accounting year. Add drawings made during the accounting year in cash or in kind. Less additional capital, the amount should be adjusted closing capital. Less opening capital, capital at the beginning of the year, the amount should be profit before adjustments. And after adjustments, add income and gains during the accounting year. Interest on drawings, interest on investment, prepaid expenses, outstanding income, undervaluation of assets or increase in the value of assets, overvaluation of liabilities or decrease in the value of liabilities. Less expenses and losses during the accounting year, interest on capital, interest on bank loan, bad debts and provision for bad and doubtful debts, depreciation on fixed assets, overvaluation of assets or decrease in the value of assets, undervaluation of liabilities or increase in the value of liabilities, outstanding expenses, income received in advance. The answer should come, that is net profit or net loss during the accounting year. Finally, in this slide, the unsolved example number 10 from the textbook is given. Suresh keeps his books by single entry system. His position on 1/4/2017 was as follows. Cash at bank rupees 4,000, cash in hand rupees 3,000, stock rupees 8,000, sundry debtors rupees 9,000, plant and machinery rupees 10,000, bills receivable rupees 3,000, creditors rupees 1,500, bills payable rupees 2,000. This is the opening balances. On 31st March 2018, his position was as follows. Cash at bank rupees 6,400, cash in hand rupees 1,800, stock rupees 10,000, sundry debtors rupees 8,000, plant and machinery rupees 10,000, bills payable rupees 5,200, creditors rupees 2,000. During the year, Suresh introduced further capital of rupees 3,000 and his drawings were rupees 700 per month. Depreciate plant and machinery by 5% and create a reserve for bad and doubtful debts at 5%. Prepare opening statement of affairs, closing statement of affairs, and statement of profit or loss for the year ended 31st March 2018. If you want, then take screenshot. So it is easy to solve the example or look at into the textbook. In this slide, the statement of affairs is prepared to find out opening and closing capital. See in the books of Suresh, statement of affairs as on liability side, amount of opening year, that is 1/4/2017, amount of closing 31st March 2018, assets, opening balances and closing balances. First, see the liability side, creditors 1,500 opening, closing 2,000, bills payable 2,000, closing 4,000, cash at bank, asset side, opening 4,000, closing 6,400, cash in hand 3,000, closing 1,800, stock 8,000 and 10,000 is closing, debtors 9,000 and 8,000, plant and machinery, both the amounts opening and closing is 10,000, bills receivable 3,000 opening and closing 5,200. So the balancing figure, that is capital, opening capital is 33,500, closing capital is 35,400. In this slide, the statement of profit or loss is prepared to find out net profit or net loss. Let's go to the slide. Statement of profit or loss for the year ended 31st March 2018. Particulars, inner column of amount and outer column of amount. Closing capital 35,400, add drawing during the year, which is 700 per month, for 12 months 8,400, amount is 43,800, less additional capital, that is 3,000, the amount is 40,800, less opening capital, amount is 33,500, the amount is before adjustment 7,300. After adjustment, less expenses and losses. The first is depreciation on plant and machinery, rupees 500, RDD rupees 400, total expenses is of rupees 900, which is less from the 7,300. So net profit during the year is 6,400. With this, I conclude the topic on single entry system. On single entry system, I am hopeful and confident that all of you have understood the topic. Thanking you for your presence and participation. I also thank respected Principal Dr. Shri Ram Kulkarni sir and Vice Principal Shri Praveen Mule sir for guidance, support and opportunity. Thank you.